you don't want to just shine in the crowdfunding world. You want to be able to shine in front of everybody.
Hello, welcome to another episode of Test, Optimize, and Scale. On today's pod, we have William Eilers, partner of Smith Eilers, working with founders, going to talk about capital raising, growth, everything that comes across his desk in his rich history. William, thanks for taking the time to join the podcast.
Absolutely. Pleasure. Thank you.
And before we get into the world of law and entrepreneurship, thought we could begin with your story and overall path to creating the firm.
Sure. That's funny. I'm actually a West Virginia boy from the sticks of West Virginia. Made my way to Miami eventually, went to law school there, and was doing divorce law. Did not like that. And I had a friend that was doing an in-house counsel for a startup that was doing a roll-up, and did work. Put up my own shingle, started doing 144 opinions, and learned the ropes of securities kind of by trial and error, hopefully not too much error. Ran my firm for about almost 15 years. And then about 2 years ago, joined forces with David Smith, which is Smith Eilers. Kind of a hodgepodge. They're a transportation-focused firm, not really much in the capital markets. And then we grew that firm to be a boutique firm of 8. We have six attorneys, 2 paralegals, and what we've kind of created is a nimble boutique firm that can kind of do everything from pure startup to the IPO. We have, we know where the bodies are buried. We've done OTC transactions. We know kind of all the dirty tricks from investor side to CEO side. And we like to roll up our sleeves. So that's kind of the design of the firm, is to be a nimble team player instead of your kind of traditional high-rise kind of attorney.
Sure. So like working with the big firm, but you're getting the white glove experience.
Exactly.
You're getting more of that personalized interaction all the way through.
Exactly. Yeah, I think the 3 biggest complaints of law firms is my lawyer doesn't get back to me, they're expensive, and they're not very communicative, like personalized, and that's what we try to get in there and really be friendly, be part of that team, especially when you're in the startup space or trying to grow. You need teammates. You don't need someone that's chastising you and telling you everything's wrong. And oftentimes lawyers will stay too much in their own lane and just provide full advice. It's a business. Capital markets to me is a business development community by all providers. The marketing side, the legal, the auditors, everybody should be working together to kind of create something for that client.
That's the right teammate to have. And you guys obviously do great work. You're very well known in the space. Where does the conversation typically start with clients around the capital markets? Do they usually know an endpoint? Hey, I want to do an IPO. We're going to raise this much. Here's the overall, plan from there. Or are you helping them determine that destination once they enter your offices?
Yeah, I would say oftentimes it's either pie in the sky vision or just the short term. Okay. And it's usually tipped off by an article or something off of LinkedIn, and they're like, "Oh, I've read about Reg A. That's what I should do," or Reg CF. So that's usually it's a short-sighted view. It's either too into the future, or just a little bit too focused on the front end. And that's part of what we try to do. It's like I get a lot of referrals because of just my presence in the crowdfunding world that are Reg A or Reg CF, or let's go public. And I talk them out of doing the Reg A or talk them out of doing an IPO because they don't quite see all the pieces that go along with that, But I think you bring up a great point. Like, I think people don't tend to have a great focus on that actual exit, not necessarily their exit, but if you're going to the crowd or you're going to any other investor, you've got to provide them something that is realistic, but that has some value in the future.
Well, it's like you said, they're not taking all of the intricacies into account. and what's required to do a successful Reg CF, regulation crowdfund campaign, or an initial public offering. You bring up crowdfunding. I know you guys work on a multitude of things. It's not just that. When are the right situations to use a Form C, regulation CF campaign, or a Reg A, Reg D? Are these vehicles that more groups should be using? What is your overall perspective on the space?
Sure. No, I think since 2017, when these rules came out, we've seen a lot of different iterations of how this is all going to work. And what it really comes down to is it's just another tool. Venture capital is a tool. Angel funds, if you want to go on angel lists or whatever, that it is a tool. I think generally crowdfunding, the first thing has to be that you have not just a simple product that your company is doing that is understandable by a large mass of people, but also that the fundamentals of that actual instrument that you're offering up is clear and people can understand it. Whether that's something as simple as just a convertible promissory note that is straightforward, that maybe has more, a preferred that has dividends. When you get into complicated financial instruments and you're going to the crowd, especially like in a CF or something, it's too much and people are not going to understand what they're getting into. That first part, though, I think is really key, is that a business to business widget that is really nuanced and could be worth billions of dollars, but it's very industry specific and it's hard for the crowd to understand. I always point out that the modeling for equity crowdfunding came off of Indiegogo and Kickstarter, right? And Pebble Watch was always their big shiny one. Well, that's because people wanted that. If you're going to the crowd, it's nice to have a product that people understand and that they kind of want, or it's a feel good product, so those are some of the biggest things I find. I think deciding between Reg A, CF, doing securities tokens offerings, 506, it really is going to depend on that exit picture. Reg A is a beautiful tool. It's expensive, Yep. It's not necessarily worth all of the work if you're not going to go public. You have a bunch of shareholders, you've spent a lot of money. It does work. I mean, when Reg A first kicked off, it was mostly private companies doing real estate projects. So I think at one point it was like 80% of the financing out of Reg A was private into real estate, but those are, again, very simple for people to understand. Reg CF is good if you can utilize a lower raise. If you can do that million or get up to the 5 million and really put it to work and show people that works, I find that to be really useful. My preferred is always going to be 506C. I think it's faster. You're dealing with more sophisticated investors, so they have a better understanding of how the financials work. You also don't have a limit. You can kind of go, the sky's the limit. I mean, I don't think most startups are really tapping out up against the 75 million with Reg A, but if you were, 506 is there. And look, there's just the pure reality of the financial state of the people. Most of the money is still going to be up at the top, so having 2,000 investors that all wrote checks for $200 to $500 may feel good, but now you're managing the expectations of 2,000 people. Having people write bigger checks, if you can make that happen, is good. I think that's one of the harder things that people don't think about once you've done that crowdfund, is now you have a bunch of people that are investors. They're not. I always like this distinction between like Kickstarter and equity crowdfunding. It's like if you asked a billionaire sitting there at lunch for $200,000 for a charity, would write a check for you without even thinking twice. If you ask that same person for $50,000 for an investment, the math, the psychology in their head changes. Now they're looking at it with an ROI, they're looking for expectation. That same psychology is true for anyone. So when you are taking people in on the crowdfund, you have to consider that 2,000 people have 2,000 different expectations. You could disclose, try to be as concise as possible, but in their mind, what their expectations are. are going to be different because they've created some kind of ROI in their head. So,
And that's when it's successful. We look at the
yes,
volume of campaigns that go live, and it's really the top 10% of Reg CF campaigns that we see moving, 6 figures or more a month, which you're talking about 5 million being a low amount of
right,
capital, accurately, by the way.
right,
And 90% of the campaigns using Reg CF really aren't even pushing it to that degree. It is a lot of those $200, $500 investments, depending on what the minimum is on the filing. I look at $1,000 as an average on a Reg CF.
yeah,
That takes into account though the $50,000 check you got and the 25, and even at
exactly,
1,000, maybe 1,000 investors per million raised. As a marketer, that is a serious obstacle. I mean, the magnitude of traffic that's required to get that volume of conversions
right.
from cold audiences is difficult in its own right, and only so many companies have done it, although it's very effective for those organizations, and we're lucky enough to partner with those groups and run their advertising and marketing. Then you bring up the challenges of investor relations and being
Yeah,
able to have that communication, feedback loop with investors, and having to hear them out and respond, not just do a presentation, quarterly
exactly.
or whatever it is. And that's why you're trying to do the right thing, while you're trying to get all of the news to those audiences. Now we will see it then parlay into their next round in many cases. But yes, it's far more work than just raising capital. And I think some founders here, the max, and their mind just goes there. They're not looking into all the steps that are required to build the proper awareness and performance for marketing, and then the ongoing discussions and communications that follow.
No, 100%. Like I wrote a blog post recently that was basically, there was the movie Field of Dreams, and the catchphrase was like, if you build it, they will come. And
Of course.
my statement is, if you build it, they won't come. Like that marketing piece, that is probably the first thing I tell anyone looking at a crowdfunding. You have to have marketing in place. And the evolution of watching that marketing over, since the rules have come into place, where like people were doing just straight up blasts of YouTube videos and Instagram and print ads. I mean, I remember driving in Florida and heard High Times advertising on a sports radio show.
Sure.
Figuring out and having a good marketing partner is so important, and not understanding that it costs. Like, I think that's the other part of all of it is, none of it's cheap. It's not IPO expensive, but it's also not, you got to take into account that marketing. And I think you bring up a great point. Like, if you're successful, so you've had good marketing, that job does not end there. It's that, being preventative by communicating to your shareholders like on a consistent basis before they start scratching their heads, and again, to this point of their own expectation. If you did your raise, close it up, and you don't talk to anyone for 12 months, any kind of newsletter, any kind of communication, people just get frustrated, right? They just want to know what's going on. Even if it's just, you got to manage those psychologies. I think it's really important to understand that there's the upfront stage costs, right? That's the legal, if you need accounting, depending on which one of those pillars you're going down. And then that marketing has to take off immediately. But you're dead on that. You have to continue that on, especially if you're looking at other raises.
Right.
Because when you want to go back to the till, then you may have, having 1,000 angry shareholders is not going to help you be able to do your next raise,
No, they say, an angry customer shares with more people than a happy one, and an investor being a retail investor being some type of blend, it can work against you. They can be your strongest advocates. We've seen full ambassador cohorts from these investors on future rounds or towards the product. Future rounds, you're talking about the beauty of Reg A, could include an IPO or further events from there. Maybe we could speak to that a little bit, but what is some of the upside, like using a Reg A? What is possible, and Why should that be looked at from a group that is going to go public, is raising capital? Maybe they're not as interested in getting a lot of the small investors, but meanwhile, they could still use it as a mechanism to get there, a tool to get there, as you were saying.
Sure. I mean, in a weird way, it's almost like a pipe, like a private investment in a public entity kind of thing, where you're using, so to get listed, whether it's on OTC markets on any of their tiers, or up to NASDAQ or the QX, there's plenty of exchanges, but they're all going to have requirements of shareholders. And the biggest piece of that is if you start, do NASDAQ or New York Stock Exchange, you're at 400 shareholders. That's to prove that you can open up a market. So depending on your business model and why you might want to go public, like a great companies that can do really well public are companies that have great value but are not cash rich, right? So that might be a good path for you, and that's a really important piece of getting you into that exchange is having enough shareholders. OTC markets is substantially smaller; it's 35 shareholders, but still, it's a lot easier to get your own market going when you have a sizable amount of people in those markets. And that also helps attract other people that know public markets. Some people don't get that at all. They really just want that coupon. If you can transition from, say, your CF, where you had a safe agreement, which is pretty common in the CF space. It gives you some value to actually convert those safes and drag along those shareholders. That's usually the most used, or to me, I shouldn't say the most used, it's the most useful way of using Reg A. It would be to go public. And both NASDAQ has its own particular rules on how you do that. Eventually you have to file a 8A and become a fully reporting company. OTC market does allow for you to be an alternative reporter, essentially, and be a QB filer there and just continue with your filings as a tier 2 Reg A.
Tier 2 allowing you to raise over 20 million.
Tier 2 up to 75 million. You need to have your audit, and then you have to have semi-annual reports and the equivalent of an 8K, which is a current event, major changes, material changes to the company, semi-annual reporting.
Where tier 1 would cap at the 20 million.
Exactly. Yeah.
Just like throwing the stats out there for audiences.
No, I apologize. I speak it all day long. So tier one has been around since the 33 Act was created, pretty much. And it's just the biggest changes was that they added this tier 2. Tier 1, you have to do blue sky, meaning you have to go to every single state and follow whatever compliance rules they have there. But tier 1 allowed this exemption for the most part. There are some states that do still require that you are a registered broker-dealer in some form, depending on that state. But tier 1 is, to me, not that useful unless you were living in New York City and your target audience for your marketing is purely within the state of New York. And then the question is, why even bother with Reg A? There's other exemptions that you could probably use. So
sure.
I think one big distinction there is that Reg A is considered an exemption to registration. And so what that means is that the shares that you get are free trading. So that's how you get to that public market. Whereas you did 506C as your crowd fund, those are regarded as restricted shares. Limits your liquidity to some extent. There are groups that are doing securities tokens and building like secondary market platforms that do allow for some exchange that's not an official national exchange. But when you're doing that, you need to be accredited. So those are your investors are only going to be accredited investors. So the point earlier, you're shrinking the number of people you're going after, but you're going after bigger coffers, essentially.
And I like that analogy you made of the billionaire writing the $200,000 check. We've seen very successful Reg D 506Cs. We're able to do the marketing on the 506B versus, of the 506C versus the B. So we've been a part of those, even side by sides with Reg CFs. I've seen them side by side with Reg A. as well too. And I have seen those to be hit or miss in terms of campaign performance, but at the same time can occur in a shorter window of time from fewer larger investors like you're speaking to.
Sure. Yeah. I mean, look, in an ideal world, for anybody that's a decent founder, would be bootstrap as far as you can, go prove yourself to a partner, a proper 506B partner, someone that really trusts you and backs you, and then or a 506C to really let it grow, and then move on towards exit. I think the only thing that you could change up in that kind of process would be the CF. I like the CF because it can be when you can't find that 506B partner and you need, that 5 million to get over that hump. That's when the CF becomes a really useful tool.
Mm-hmm.
But,
what about the appetite for STOs? You're talking about security token type raises. Have you seen that pick back up here in 2023? I know it was an initiative that we were, brought to years back, much more frequently. Do you see more growth there in the years to come? Are there still questions around regulation? Obviously, there's some big pending cases having to do with cryptocurrencies and tokens, being part of that ecosystem to an extent. What are you seeing with security token offerings today?
So, I mean, predictably, I truly believe that blockchain and that particular technology is going to be what the future of all securities exchanges will be. It's just it's not as messy. You think of the old days of how they cleared stock with people running down the street. We've gotten to a little bit more sophisticated place, but to me, it just makes the most sense. But I think the distinction between cryptocurrencies and white papers and the ICOs that went on for the last 4 or 5 years, I turned down a lot of clients because I kept saying these are securities. I don't care what the SEC says. I don't care what the Treasury says. They were kind of kicking the can back and forth. And I was like, I'll do it, but it's got to be a security. And to that, I think there's been a little bit of a drought because of things like my mind went blank on the gentleman going to jail now. But
FTX, Sam Bankman.
Thank you. But and watching the Ripple case ongoing with the SEC. But I think the distinction there is like they're making arguments over the currency constructs, not whether or not this is a security. So to me, STOs people are starting to see that difference a little bit more. I kind of define it as a digital representation of a preferred share, right? Because usually these STOs, just like any other offering that's got some kind of dividend payment or some kind of redemption, that's basically what you're doing. It's just on the blockchain and it's represented by a token that you can exchange in a much more quick, easier fashion. So I think that it's going to continue to grow. I don't think the markets, like I said, there are some platforms that are doing the secondary markets. They're limited, so you don't have a lot of liquidity. There's not a lot of participation on those. So your underlying fundamentals of the financial instrument itself still need to be sound, whether that's a rev share or a coupon paid on a quarterly basis or whatever that is. Those fundamentals still need to be there because it's not going to be a hugely volatile market, at least not in the short term. I haven't seen too many people doing just the equivalent of a straight common stock, and that's been traded on an exchange too much. There are some, but it's still kind of following that crowdfund model of rev share, some other version of either a conversion like a safe agreement or a convertible note or some kind of cash kicker dividend.
Sure.
I do think it is.
Yeah.
Go ahead.
I just like your perspective on that and how it is the future just needs more adoption. And, there's so many different functions that will help down the line.
Yeah. I mean, the other thing I find interesting in that space is that one thing, talking about the marketing side, like you have to go find the right investor. Some things work really well for venture capital and you don't need to do crowdfunding. And then you can make that a little bit more micro in the crowdfunding space. Like you need to focus on these types of investors because this is what the company does. In that same kind of diversity of or call it class of investors, there are people that are just pure crypto people. And STOs do allow for you to access a little bit more of a crowd because there is the crypto side of people that would be willing to play with it because they're looking at it more of crypto, but your traditional people are looking at it as that preferred kind of play. And so it does open up your bandwidth a little bit as far as who you're reaching out to.
Absolutely. We A/B test, variant test audiences, and that is included in the stack for STOs that we work on. And, for us, we're not in your world. We're not experts on the compliance side. So we have to make sure everything's triple checked. There's agencies that have made, partnerships with companies that got in trouble on, legal perspectives that were gray and ended up, not sitting on the right side of the fence. So security token offering, that's why we play so much in equity crowdfunding, because we do know it's all above water. But being able to see those audiences come to the table and convert on those filings, like you said, accredited, can be very effective. Where do you see everything going as a whole? And I've been talking about this for a while. Reg CF went into effect in 2016. Tier 2 of Reg A around then as well. Where do you picture things in 2030? As an example, will Reg D, be the standard? Is it more of getting a crowd and using Reg CF? Maybe Reg CF is at a higher max at that point. I imagine Reg A will be, but like you said, there's only so many companies hitting that upper level of the 75 million to begin with. So, will there be the investor success stories of groups that used Reg A, their investors came in, the company went public, the stock went up, there's all these investor success stories? It's certainly what we saw with, crypto, misspending from investors that were, taking their earnings. I'm hoping it's not Lamborghinis and that whole thing again. But at the same time, I do believe investor success stories will bring more of the mainstream, to public, private offerings. Where do you envision this all going in the next 5-10 years?
Honestly, I think like with anything new, it seems really shiny and I'm trying to think of the right word here, but honestly, I think that it will become as I mentioned earlier, very much another tool. I think that the democratization of investment I think the community, being the lawyers, the marketers, the auditors, and people that are in this space, that's part of what we need to advocate for, because I think that that's really the key to it. It is the democratization of capital. But without that, I think we will get to a place where there will be, to this point of a class of people, there will be the people that like to play with crowdfunding, and it will be a legitimate and more definitive way of raising funds, where like if someone came to me and they're like, what do you think a venture capitalist would want to invest in this? I can say to them, no, because you don't fit their model. I think the model of what will fit crowdfunding is going to be more refined and more refined. The marketing is going to become more refined. And so it will be more of a stable piece, and people like you and me will more likely be able to say, I can't recommend this is going to be the right path for you. You can do it. You can spend the money. But I think that's truly, it's going to become a very mature way to raise money, and we'll have a much better sense of it. I think there was a real hope there that, and I would still love to see it, but I haven't seen it come to fruition, which is for this to replace the VC model, right? To replace PE and those kind of things. And until there's some version of allowing crowdfunding into funds, which you can do with 506c, but some kind of collective fund or mutual existence that way, that it's hard to compete with those guys. But from a founder's perspective, if I have the option to take a gamble and raise $20 million through a crowdfunding campaign and not dilute myself nearly as much. None of these shareholders are asking for board seats or someone to sit in on the office. They're not telling me what to do on what my next direction is and where I should pivot. From a founder's perspective, I would love to have that.
Mhm.
I think if we can, as the kind of the community and the providers in this, build that space out, that's really amazing. And that's why I would like to see it. I just don't know. I don't know if my gut feeling is that becomes just more of that mature kind of another pillar for funding. I think the other part of it is, look, I mean, it sounds awful. I know that part of the audience here are founders, but I think founders should just be honest with themselves. Like, not every idea that you came up with in the shower is going to make money. I think I know that you've seen that, right? There's been, for a while, there was just a glut of just too many bad ideas, or it's one thing about CF is that it's really easy to fill out, and then you live. You paid start engine, and you're off to the races. So that part, I think we will start seeing more sophistication stuff there. I think we got a lot of, like, the crowdfunding space got really crowded with a lot of different ideas, and I think that because of the nature of what it is, and because of what we know, that we can start whittling that down and see a really cool. And that once you get that, then I think you build that maturity and actually get a lot more respect. I mean, I talked to major funds, and I've asked them if they would want to participate in a 506c, and they crowdfunding, they're terrified of it. They think it's crypto. They think it's the Wild West. If we can get that maturity, that those funds actually start respecting the crowdfunding world, that opens up a whole nother world of being able to having large funds write a match, 1-for-1 match, or some other kind of structure that they're not 100% of the money in, they're not the first money in, or that's where I would love to see the space actually go.
Absolutely. I'd love to see more work done before the round goes live. We'll look at audience size. We'll look at what can be done before an offering goes live, and how that impacts the success of the crowdfunding campaign through any of those filings. And you're right. Ideas are a dime a dozen. It all comes down to execution. And in some cases, I see amazing products, but founders that need a team. Maybe an experienced CEO even at that, but regardless, a team, a network, more education around the foundation that needs to occur before one of these campaigns go live. There was sayings early in equity crowdfunding. I remember 2016, 2017 of, oh yeah, deals go here when they can't get funded offline.
Right. Exactly. Exactly.
Private equity, venture capital didn't care. Now they're trying to, go at the crowd. And I do see that happening less. I do see founders that say, hey, my Reg CF offering page, it is my PPM. And that's where I direct investors to. And it, removes the middleman, kinda. Meanwhile, they're able to get their valuation. And when an investment comes in that's larger, they'll see a spike from smaller investors that are on the sideline, and then act once they see that momentum, because I believe it's very much based on crowd dynamics. But I'm seeing companies now choosing to go this route versus the VC route in some occasions. I still think the majority of the big groups are doing it offline, and like you, I'm hoping to see that change. I don't know if it'll replace it, but hoping to see more attractiveness to the tool over time, more of a success rate industry wide, more support for those companies to be able to succeed there. And speaking to that, like to package some actionable insights for listeners. If anybody's tuning in, they're about to do their own fundraising round, whether they have a determined route yet or not, 506C, Reg A, like you said, they're filling out the Form C, whatever it may be. What are some things they could test out towards their fundraising? I love how earlier you said, bootstrap, go at your existing network, exhaust all of your resources before you start taking it on the road, but let alone online. But what are some tips? What are some things that they could test out towards their own capital?
Sure. I mean, I think one thing is using the testing the waters tools is always a great thing. You know, the SEC does allow for that, and they changed the rule recently so that it didn't have to be specific to any of the crowdfunding pieces. So you can essentially use it as a survey. I mean, do keep in mind that it is considered an offering. That's in order to protect from fraud. You know, so there are legal requirements and things to think about with, but that's a great piece. I think building out as much of your own, like proving that you have some clout with the crowd, with your product, just, you know, whether that's Instagram followers or whatever you need in that space. You know, I mean, even though it's probably one of the tragic stories of crowdfunding, Ilios Motors was raised, they were the first one to really kind of go public, and they raised 85% of their money from existing pre-orders of their electric car. You know, so that shows that like they had people ready to write checks. You know, I think focusing on that, and then probably the other really key point is making sure that you understand your numbers, especially if you're doing rep shares or however you're doing notes that you're going to service. Because to our point at the very beginning, you know, a bad shareholder is going to spoil the whole bunch, and making sure that you understand that's about execution. Like, don't promise the world. I saw a website the other day that said extraordinary returns, 67%. You know, don't promise the world. Be conservative. You know, nothing makes anybody happier than telling them they're going to get $5 and now they get 20. You know, but I really think that trying to get a feel from your own customer base and anyone that might be interested is key. There are tools there that are not going to cost you an audit, you know. And then on that side, plan ahead. Don't come up short. Audits are not cheap anymore. You know, if you want to go the Reg A way, expect to pay 20 to 50 grand on an audit. Legal, you know, there are people that can do stuff that's not straight legal, but they will do your drafting. But you know, legal's expensive. Securities is not the cheapest of all the legal. You know, we're not Ticket Clinic.
Sure.
And mapping that out, and then I think getting in touch with a marketing firm sooner than later. Whether, you know, there's all kinds. You guys are great in the space. There's, you know, finding somebody that's a good partner that can tell you, look, that's not going to work. And I've had clients where I've referred them to a different, like I'll have certain people that I'll refer on the marketing side, but that one particular thing about their company fit another marketing strategy a little bit better. Or that was my assumption. I could have been wrong. But regardless, like getting in touch with a marketing firm soon, because again, that's the most important part. If you can't get out to the crowd and you can't actually market it, it's meaningless. And if you spend $250,000, $300,000 a month, which I've seen on a Reg A, and it's not targeted and it's not with somebody that understands who they're marketing to, it's just burning money away. So now you're $500,000 in a Reg A, and you have nothing to show for it. So I think that is one of the biggest things as a piece of advice is speak to a service provider, and probably a market. I always say, don't talk to me about it. Talk to a marketer.
Absolutely. And I don't just say that because we work in marketing. I largely look at this as a digital exercise, a digital business activity. And, you know, whether it's us, whether it's another marketing consultant, the earlier you begin, the better. As mentioned, that there are things that can be added to create a much stronger foundation, a much stronger trajectory towards success. And, you know, not just about marketing. Speaking to William early on, getting it done right, not just people who could draft it up, but actually spending the money with the right groups can make all the difference. And I have horror stories I could share from other issuers that, you know, shared with me legal and audit obstacles that they ran into during their campaign, which is what nobody wants. And you know, love the idea of the test the waters, pre-launch marketing compliantly, you know, getting reservations and having that first day, the first week of the actual live campaign, that much more powerful because you've already pre-sold your audience. You've already set them up to come in those early stages. What about when it's not working? What about when it's that, 250, 500,000 a month and it's not working on a Reg A that's set out to raise 75 million, or even, 10, 15 grand a month on a Reg CF that's out to raise 1.235, let alone a million, and it's not performing. What are some different tactics? What are some different approaches you've seen towards optimization that have made a difference?
Well, I mean, I think this goes back to the quality of that marketing, because if your marketer is pulling good data, you can see where the points are, and you work with them to pivot. I think the question is always the bleed. We're all human. We all want to believe that we can succeed, and sometimes we just are not doing it. It just doesn't work. So knowing that, look, it's a risk. Everything in securities world and capital markets is risk. I mean, it's what lawyers, 90% of what we do is just design documents to make sure that we are disclosing, hey, shareholder, this isn't going to work. But I think that needs to be a thought process for the founders. Like being an entrepreneur is a risky venture. And, if you're that far deep, the temptation is to keep throwing money at it. But I think making a pause and seeing, all right, where are the positive points in the data collection? And I really think the data collection in that marketing is really important, and that's why the kind of spitballing and just blasting the internet is not always great, because you need to be able to see where those points are that you can pivot and work with your marketing team to maybe put out more content that's more driven by this other thing. Always work with the attorney and make sure that the content is in compliance. But
yes,
but that to me, and Reg A is a scary one that way, because you can spend a lot of money, and it turns out, and I think the hard part is you may be running a really successful business, and that doesn't mean that you are going to raise money in the crowd. It may be a time to go, you know what, I didn't want to go knock on the door of a VC because I didn't want to give up that much of the company, but I have a good company. We're doing growth. We're doing 10x on every 2 years. Well, everything's good. Maybe it's time to just eat that. And I think part of that all goes into budgeting overall for a crowdfund, is to know that you have the cash flow available to take a little bit of a risk.
Definitely need the budget to be able to drive the traffic in the majority of cases. We've seen have been some exceptions where the user base is large enough. But looking at the projections in the industry, some groups on Reg CF look for a 10x return. Even if they're getting 5, 20x, anywhere in there, it still requires a good amount of budget. You lean into it, but being able to pivot and actually be honest with themselves. Like you said, hey, this isn't working. We need to change something up. Let's do it productively. Audience, messaging, funnel. What are we going to move? But we need to make some changes to be able to see the performance. And then lastly, what about scale? What are some of the larger, campaigns you've been a part of, or, just tips that you've seen towards success, towards taking things to the highest levels? What are some, best practices towards scale for listeners?
Sure. No, I mean, I think I'll go back to the original point. I think people invest in management. As much as we love ideas, they invest in management, and making that shine is going to be where your success lies at all times. That's true at an IPO, large $200 million, $1 billion IPO. I saw a couple recently, $1.3 million IPOs. That's what people invest in. Even the retail investor, they may not necessarily at the retail side see that in their own mind, and that's not to put down retail investors. They're just not. They may be looking at that product, but it's about how you've shown that and how you show that you can actually get things done. I mean, retail investors aren't dumb. If we have social media, we're seeing every silly product under the sun, and people know how to sift through that. We're becoming more sophisticated digital consumers. So to me, execution is huge, and showing that you put in the sweat equity. I mean, that's probably across the board, regardless of crowdfunding or anything, is the biggest problem I run into. People want, I have a project, I want $100 million. I don't want to give away more than 20%. What do you have? I have an idea. Nobody's going to give you that money. Nobody's going to give you that money. You have to show that you are committed to this and that you know how to solve a problem. And I think, crowdfunding, to this idea that is a tool, it is, part of capital markets is making sure that the different tools work together. We brought up like IPO and using a Reg A to get there. You can do that, and maybe it is underwritten, maybe it's not. But once you're at a public market, you're not doing crowdfunding anymore. Now you're going to institutions and looking for different kind of things. So that thread of being an executor is so key, because you don't want to just shine in the crowdfunding world. You want to be able to shine in front of everybody. You don't want the VC or the PE or family office. You want them to say, "I love your idea. It just doesn't fit our portfolio." You don't want them to say, "Yeah, you don't know what you're doing," right? So I think the crowd is the same thing. I think that's one of the most important things.
And the crowd is, those same individuals in some cases, but at scale. And, not to underestimate the retail investor. Like you mentioned, we're in the information era. It's different than it was in 1933. And, you wanted to, check all the boxes for, the VCs, for the accredited. That way, when you take it to retail, you're getting a similar type of response, but at scale.
Exactly.
Yeah.
Yeah.
Awesome, William. Well, I know I took up a whole page of notes here. Going to be going over this with my team and clients. You are a wealth of knowledge here on the capital markets, on the legal perspectives. As we begin to wrap up here, any final thoughts you want to leave listeners with, and what is the best way for them to get in contact with you, with your firm?
No, I mean, I think to this point of execution and doing that, like I think I'm a big supporter in that. I think finding a team of service providers, don't try to do it all. I know it's a pain to see a legal bill. I know it's a pain to see a marketer's bill or an auditor's bill. But, especially in the crowdfunding space, we've made a real effort to be a community and really support the issuers that we deal with. And I think you would be shooting yourself in the foot if you don't take advantage of that. It shows, and to that other point of execution, it shows that you understand the value of a good team and professionals to be around you. So I think always, don't cut corners, bootstrap, but don't cut corners. Be smart and don't do things that are outside of your wheelhouse. If you, to get in touch with us, probably the easiest is always going to be the website, Smith Eilers. That's EILERS, SmithEilers.com. We'd happy to chat with anyone looking to do crowdfunding or any other kind of securities market.
Awesome. And highly recommend that you do, as William's saying, bootstrap, don't cut corners. Love that. William, thank you so much again for taking the time and having the discussion with us today.
No, that's a pleasure. Appreciate it.
Excellent. And want to thank everybody for tuning in. We'll see you next time.